Welcome to Econolocast. So, have you ever looked at the news and just felt confused? Like you're getting two completely different stories about the economy? On one hand, you hear about these record-breaking highs on Wall Street, but on the other, you're hearing all these stories about struggle on Main Street. Well, today, we're going to dive deep into that, analyzing a documentary that tries to decode this exact disconnect. I mean, just think about the headlines you see every single day. On one side, it looks like a nonstop party, right? New records for the Dow, the Nasdaq, all the big market indexes that track our biggest companies. It paints this picture of incredible prosperity. But then you get the other side of the story. Farmers are getting absolutely squeezed by tariffs. Shoppers are getting emails that their orders are canceled. And small businesses are swallowing costs they just never saw coming. So what's the real story here? And yeah, that leads us right to the central puzzle of this whole thing. If so many businesses and, regular people are feeling the economic squeeze, how on earth can the stock market be hitting these unbelievable all-time highs? It feels like it makes no sense, but there is an explanation. The first clue, it all comes down to this one number, 7. That's it. Turns out the performance of the entire market, all those record-breaking numbers we keep seeing, it's pretty much being driven by just 7 gigantic companies. So why do these 7 companies have such a huge impact? Well, it's because they're basically living in their own world. They're so massive, so powerful, that things like tariffs, the very policies that are crushing smaller businesses, they barely even feel them. So they thrive. And in doing so, they create what the source material calls an illusion of prosperity that completely masks the trouble brewing for pretty much everyone else. And this brings us to a really, really crucial point. For decades, we've kind of used market indexes like the Dow as a shortcut for the whole economy's health. But that link? It's broken. As one expert in the documentary puts it, these numbers are no longer metrics for the overall economy. They're just metrics for the well-being of a few tech giants. Okay, so there's a second major factor at play here. It's something called the hype cycle. And according to the experts we're looking at, we are not just in any hype cycle, we're in a major one. This is when there's all this intense excitement fueled by Wall Street and the media that pushes stock prices into the stratosphere, totally detached from what's actually happening on the ground. So why is this so concerning? Well, because we've seen this movie before. The last time the experts flagged this level of crazy speculation was in 2007, right before the crash of 2008. Back then, there were warning signs, little breadcrumbs that something was wrong. And it really forces us to ask, are we just ignoring the same kind of breadcrumbs today? So who actually benefits from keeping this hype cycle going? Well, the source points to a few key groups. You've got the financial news networks, because they get way more viewers when they show those exciting green, upward trending numbers. You've got Wall Street firms that make a ton of money hyping stocks. And of course, when asset prices soar, the mega rich, well, they get mega richer. You see the problem here, right? If the stock market isn't giving us the real story anymore, where should we be looking for reliable data? Unfortunately, the documentary suggests that even that isn't so simple. It turns out even the hard data we normally rely on, like consumer spending, is getting all twisted up. And why? Because people and businesses are trying to front-run the tariffs. They're buying up a ton of imported goods before the new taxes hit, and that temporarily makes the spending numbers look great, but it's not real, sustainable economic activity. And this really gets to the heart of what the source calls crony capitalism. Think about it like this. On one hand, a huge, well-connected company, personified as Tim Apple, can get a meeting at the White House and ask for an exemption from tariffs. But on the other hand, the next big thing, the next innovator, the 2 blokes in a garage, they can't get that meeting. They're just stuck paying extra for their parts, which could kill their idea before it even gets off the ground. So let's just strip away all the political spin for a second. The documentary argues that, despite all the complicated arguments about trade, what a tariff actually is boils down to one simple thing. It is not a tax that other countries pay, it's a tax on the American consumer, period. So how does that tax actually get to you? Well, at first, corporations absorbed some of the cost. They kind of shielded us from the immediate impact. But that's just a temporary fix. Ultimately, that cost has to go somewhere. And since companies won't absorb these taxes forever, it means that eventually you, the American consumer, will feel the full effect. And what's really fascinating here is that according to the polling data cited, the public seems to get this. By a margin of at least 2-1, Americans are against these kinds of protectionist policies. It seems the argument that these tariffs are a good thing has lost the battle of ideas.
And that brings us to this really stark warning from one of the experts. All of these disconnects, all this economic pressure that's being hidden by the hype cycle, it just can't last forever. At some point, as they say, this is all going to come home to roost. So, where does that leave us? Well, the source suggests 3 key things to take away. First, just recognize the disconnect. The next time you see the market hit some crazy new high, ask yourself if that really reflects what's happening for most people. Second, understand the real cost. A tariff isn't some abstract policy, it's a tax that eventually comes out of your pocket. And finally, the source says if you're concerned about this, it's time to rattle the cage and make your voice heard.
And that leaves us with one final big question to think about. If those huge, flashy numbers you see on Wall Street are just an illusion of prosperity for most of us, what should we be using as our real measure? What does a truly prosperous economy actually look like for everyone?